updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We begin with a headline from the Bloomberg Professional Service. Lazard said to be in advanced talks to buy the hedge fund Brigade. Stocks higher as we head toward the close. 13 minutes to go. We've got the S&P up 4 right now. Could see records up 0.1%. The Dow, which crossed 36,000 earlier today, up now by 63 points, up 0.2%. 35,882 right now on the Dow. Nasdaq up 74, up 0.5%, but by far the outperformer today. The Russell 2000 surging 2.6%. 10-year yield 1.56%. Gold up 0.5, 17.91 the ounce. Bitcoin lower, little change, down less than 0.1%, while crude is up 0.4%. 83.93 a barrel. Stocks trading at or near records as solid corporate earnings overshadowed disappointing manufacturing data. Recapping, S&P up 4, up 0.1%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much, Charlie Pellet. It's 3:48 on Wall Street.
The following is an editorial from Bloomberg Opinion.
China's stepped-up nuclear ambitions have been hard to miss in recent months. Satellite images suggest the country has been building fields of new missile silos. The Pentagon predicts China's stockpile of operational warheads will more than double by 2030. In responding to this new reality, the U.S. should keep the threat in perspective. Even if China quadrupled its stockpile, it would still lag far behind the nearly 4,000 warheads in the U.S. arsenal. For now, China seems more concerned with ensuring that it can absorb a first strike and retaliate than with matching the U.S. bomb for bomb. That makes it essential to avoid overreaction. When Joe Biden meets Xi Jinping by video later this year, he should underscore the need to stabilize the U.S.-China relationship. Otherwise, the world could face a devastating new nuclear arms race. This editorial was written by the Bloomberg Editorial Board. For more opinion, please go to bloomberg.com/opinion or OPIN-GO on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, just about 10 minutes left in today's trading session, so let's get to it. Let's drive to the close with Hank Smith back with us, head of investment strategy over at Haverford Trust. Once again, on the phone from Radnor, Pennsylvania. So, Hank, good to have you here. Feels like we've gotten through a lot over the last month in terms of earnings. We're seeing outperformance once again when it comes to earnings beats, and we're seeing the markets up a lot as a result. We're up 6% gain in the benchmark since the earnings season began. Best performance over a comparable.
Okay, guys, regarding this, as you can see, spike, we're still holding, but they didn't sell and we're still on. Okay, guys? Okay.
Earnings based on the slowdown, economic slowdown, and concerned about the debt ceiling and Washington, D.C. uncertainty. And of course, corporate America has come through beautifully in the third quarter with 80% of those companies reporting beating on the bottom line and 75% beating on the top line. and so I think what I think.
Actually, Tim's going to correct you because I think it's, what is it?
82.8% to be specific, according to data from Bloomberg
We were just looking at the
Intelligence.
latest research.
You read our mind, Hank.
I appreciate the detail.
Sorry, continue.
But,
go ahead.
You know, I think what is proven to be is this continues to be a buy on the dips market as it has been all year, and in fact, since the start of the new bull market, March 24th, 2020, as well, despite the rise in yields with the 10-year Treasury at 1.57%, it is still not competition for the stock market. So we're still in a TINA environment. There is no alternative. And when you come right down to
So
it,
buy on the dip, Tina, they all apply.
Unless even Doge.
Yeah, if you're into Doge, then we know I don't know.
Then we're moving on. No. Hank, when does the party end, though? When does the music stop?
Well, let's just frame it this way. The tailwinds continue to be stronger than the headwinds, and when that changes, I think we're going to have a correction. The tailwinds, very simply, incredible monetary stimulus, incredible fiscal stimulus, incredible corporate earnings, and a consumer that is in excellent shape and is willing to spend. We still haven't really seen all of the unleashing of pent-up demand because that Delta variant did pour some cold water over what was really an extraordinary unleashing of pent-up demand. The headwinds simply remains number one, COVID. If COVID reemerges, we're going to slow down. Washington, D.C. uncertainty. We still have a debt ceiling to pass, and we still don't know what the reconciliation bill is going to be, the final version of it. But we do know that the taxes aren't going to be nearly as onerous as what was feared 2 quarters ago. China slowing growth is a issue as well. And, of course, inflation. And the debate that we've had now for the past several quarters, is this transitory inflation or is this persistent, insidious inflation?
So if you were a betting man and you got to make investment calls for clients, which you do, so what would you say? Is it too early to say, here's what we think 2022 holds for everyone? It's funny, I was at an event and someone said to me, because they know what I do, and they're like, so what do you think is going to happen with interest rates?
Yeah, Carol, what do you think?
And I said, even if they go up a little bit, they're still low by a historical measure. And so I don't think the Fed's going to do anything drastic, but you're the guy who's really got to, make decisions for, millions of dollars of investment money. So what's your bet?
So, Carol, you made a good point there. The Fed, whatever it's going to do, is going to be well telegraphed and it's going to be gradual. And I mentioned unleashing of pent-up demand. We still believe there's plenty of that to go, and we think that is going to drive the economy through 2022, and corporate earnings are going to remain robust in that environment. So the Delta variant just threw a temporary wet rag over this unleashing of pent-up demand. It will resume. And
but the worry is if we do get, let's say, if anything, the Delta variant, it was troublesome, but we managed our way through it, right? For the most part, there's certainly hot spots, and I would never say that we've gotten through it completely. But if we get something that isn't so easily manageable, or the current vaccine isn't able to deal with it, that's going to be a problem.
Potentially, but look, COVID reared its ugly head last winter, and we got through that as well.
Yeah.
So I'm very optimistic that politicians are not going to repeat the same mistakes they did early in 2020 when they locked down the economy. I think one of the lessons is that was not the right approach, just choking off the economy entirely. So maybe that's misplaced optimism with regards to politicians making the right decisions. But I think in this case they will. So we're rather optimistic. Yes, there are going to be bumps in the road. The S&P has not had a correction since the start of this bull market over a year and a half ago. That's highly unusual. The NASDAQ did a year ago, back in September, October, but the S&P has not. And investors should always expect corrections, but we believe that's going to be a buying event as opposed to something that morphs into a bear market, which we think is very unlikely because the risk of a recession occurring over the next 12 to 18 months is very, very low.
So where we started, buy on the dip, and Tina, right? It comes back to that.
Exactly.
Hey, just in the last 30 seconds that we have with you, Hank, change in non-farm payrolls, we're getting that data on Friday. 450,000 is what Bloomberg economists are expecting, or surveyed by Bloomberg, I should say. How could things go haywire?
Well, certainly the last month's report was way off the mark. And here's the unknown here. Look, we do have labor disruptions for sure. And how much of it is people taking early retirement that will not come back into the workforce, and that is something that's very, very hard to quantify.
Right.
I think once we get through the fears of the pandemic, that we have schools and daycare fully reopened.
Got it.
And some of the government policies kind of step away and the private sector takes over. I think the labor markets are going to recover even very, very well.
Hank Smith over at Haverford Trust, thank you so much for your thoughts. Appreciate it. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio and Bloomberg TV and on YouTube. We're counting you down to the close on this Monday.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Taylor Rich, Nolly Bassick in for Caroline Hyde, counting you down to the closing bell. Here to help take us beyond the bell, it's our global simulcast. Haven't seen him in a while. Carol Master and Tim Stenovic, you look great, both of you, bringing together Bloomberg television, radio, and YouTube audiences to parse the crucial moments of the day. And this is a record-setting day pretty much across the board.
Yeah, it's incredible to see some of the moves that we're seeing on this Monday. First trading day of November. Romaine, we missed you, so it's good to have you back. And a favorite index of yours, those small caps, really moving ahead big time, up almost 2.7%, Tim, in today's session.
May I remind you that we are still in the midst of earnings season, and the companies that have reported thus far, especially those in the S&P 500, have done particularly well. More than 82.8%, or 82.8% exactly, of S&P 500 companies that have reported earnings have beaten expectations. We're just getting started. We got Pfizer, T-Mobile, Lyft, Uber, Amgen, Roku, Discovery, Peloton, and more all coming later this week.
And what is so interesting is when you take a look at an equity market like the S&P that's posted gains of 10% or more through October 31st, Janelle, November and December continue to be banner months. So it certainly feels by historical standards that this equity market is going nowhere but one direction.
Yeah, absolutely. And it's interesting what's driving it higher. It's the companies that are doing deals, that's mergers and acquisitions, cutting deals with suppliers, and cutting deals with their workers.
Yeah, cutting deals. Sorry, we're going to keep an eye on that here. You know, guys, we talk about, of course, we got to talk about Dow 36,000. We did actually trade slightly above it. It doesn't look like it's going to close there, but a pretty significant milestone here. We had Jim Glassman on just a little bit earlier.
Yeah, exactly. And it's a significant, the technicians look at something like a Dow 36,000. It's certainly a significant point. And here we are after bouncing around today. Romaine, we're going to finish off our highs and lows, but NASDAQ pretty much at its highs today.
All right, well, we're still talking record close here for the Dow Jones Industrial Average, 35,913 and change as we wait for those numbers to settle. That's up about 0.3%. The S&P 500 going to close at a record high, up about 0.2%. The NASDAQ Composite going to close at a record high, up about 0.6%. And of course, we talk about the Russell 2000. I think this is probably the more interesting move of the day here. We're closing up about 2.6% here. That's 2358 and change. Of course, the record high was 2360. And more importantly, of all the major indices, this is really the only one that never really managed to reclaim its earlier highs from this year. Of course, that was set back on March 15th, right around 2360 and change, I'm told by Taylor.
Yeah, and those Russell, I should say, the Russell is up about 19% this year. That compares. So there's your small caps, your broad, big caps up about almost 23% by the S&P 500. So you've definitely seen some outperformance when it comes to those big cap names, Taylor.
Let's take a look at the winners, the sector losers, as we always do for our radio audience when we take a look at, and this is a good one. You know, Carol, I did this just for you on a, well, I'm taking a look. Yeah, so there, look, you're half in the green and you're half in the red.
You did this for Carol.
I wanted to do, well, when I was looking at it on a year-to-date basis, everything is in the green. So there, I was going to give Carol a big boost for her gainers. But on a one-day basis, you can see it is about 50-50. It's autos. How much of this, Carol, and I know we might mention this later, is Tesla and some of the chip makers. The SOX index is also at a big record high right now. Yes. And on the bottom of that screen, some of the software services and the retailing index, as well as we talk about some of those supply chain issues that continue to weigh on the market.
See, Romaine, you go away and the Beyond the Bellers will play. And this is what a little alliance between me and Taylor. Hey, let's talk about Tesla, because it was truly one of the big outperformers, up 8.5% in today's session. Top in the NASDAQ 100, top in the S&P S&P 500 up for a fourth straight day. This is after recording the biggest monthly gain that we've seen in almost a year to cap October with an all-time high market value. You know, we've talked about it, 1.1 trillion in terms of that market cap. Tesla's up.
Can I correct you, Carol? I always correct Taylor.
Is it 1.2 now?
Yeah, it's 1.2.
Yes,
This is what I do.
It's hard to keep up. It's up 71% this year, and it's up more than 100% so far from its March 8th low. So that's certainly a standout. That gain in Tesla helped really that whole solar sector, all the EV sector, not the solar sector, the EV sector, anybody in kind of alternative energy. Another one is Hyzon Motors. That stock was up 21%. Having a rough year, it's down more than 40%, but nonetheless a big jump in today's session. And I do want to mention, Shanali mentioned some of the deals that have been going on. Franklin Resources, another deal in the U.S. asset management space. Last week it was T. Rowe buying Oak Hill. Today it was Franklin Resources buying Lexington Partners for 1.75. Franklin, a top gainer in the S&P 500, up almost 12% in today's session, too.
Some companies are buying companies. Some companies are selling a lot of homes. Zillow is one of those. Bloomberg exclusively reporting that Zillow is looking to sell about 7,000 homes for about $2.8 billion. This, according to people familiar with the matter, that's sending shares of Zillow down by more than 6% today. The plan is to sell them to multiple buyers, not just a single transaction. Remember, the company recently said it would stop making offers on its home flipping operation for the rest of the year, putting a record number of homes on the market in September, that according to Yipit data. Moderna finishing the day off of session lows, but still down 2.33%. It was down as much as 7% earlier in the session after its COVID-19 shot failed to secure U.S. regulatory authorization in teenagers. Still, though, guys, the best performer in the S&P 500 so far this year. The stock is higher by more than 200%.
Okay, guys, as you can see, position closed. On British pound, just right here, 136, 639. We have 1,000 pounds in profit. Well done, guys, all of you who decided to trade with me this afternoon. Well done. We made a profit on British pound. Okay, I'll speak to you later. I will show for newbies, for new people, how we made a profit. And let's move on. Let's see what other opportunity will bring us tonight. We still have time. Market is closed, but Forex never sleeps. Yeah, only maybe in 1 hour time it will be reallocation. A couple of banks will reallocate their assets, and again, new day will bring us probably 11 o'clock because time frame changes. Okay, guys. For new people who want to find out how we trade, you need to go to companyeye.co.uk and we will show you how we trade. We will provide you 1 hour webinar. So if you're interested, you're welcome. For other people, this is channel mostly for our clients. So they can see how we trade, how we make money, how we make profit for them. Stay safe, guys. Stay safe, and I'll speak to you later.
Signaling that inflation is worse than we thought, the Fed has to act quickly, and that is then going to push growth down on the long end. Though I'm getting a lot of signals here that these are a lot of technicals and getting some pushback.
So a lot of fodder for when the Fed meets this week, right? We've got a big Fed decision. They're in a bit of a predicament because we are seeing certainly inflation continue to tick higher. There's concerns about those supply chains. They're looking at the yield curve, what's happening, certainly shorter versus the longer term, and trying to make sure that they don't make a policy mistake. Because what the Fed does not want to do is raise rates and then have to cut rates in a few months, right? Because remember, it takes a while for all of this to work its way through the economy. So they're in a bit of a predicament.
Well, are they? Can I push back on that? Because
sure.
I mean, look, I mean, they're not changing rates right now. They basically said they're not going to do anything until they finish the taper, and even then, they say it's not actually linked to the taper. I don't know if I necessarily believe that. But you're talking about a taper, basically a pullback in what they've been buying. That doesn't necessarily mean they're actually removing policy support altogether. I mean, you're still going to have a relatively large balance sheet, and you still have at least what people in the market believe is some sort of implicit backing here that they're not going to let any sort of huge drop in risk assets occur. Whether that's true or not remains to be seen.
Go ahead. I know Carol wants to jump in. She's dying to jump in on this.
The only thing I would jump back is I think we know that they're going to cut back on their asset purchases. We know it. They have certainly telegraphed it in a big way. But does the market want them to be more specific about interest rates? Because there's a fair amount of debate there, and that's where I think the Fed Fed is in a tricky position about what they say, because if they say too much and say that they're moving closer to raising rates, does that kind of set off the markets, and will that kind of play out?
So you're calling for a tantrum, is what you're saying.
Well,
invest,
I don't know.
call it like it is.
We keep talking to people on Bloomberg Radio. I keep talking to them on Quick Take Stock. Like Christina Hooper earlier in the day from Invesco telling us that essentially the Fed has done such a good job of communicating what they're going to do.
So far, yeah.
So far, they just have to rip the Band-Aid off. She doesn't expect any surprises
Taylor,
this
who did we
week.
talked to earlier who said that they were expecting 5 rate hikes
Marcy McGregor,
by the end of 2023?
right? Yeah.
Marcy McGregor.
You certainly have investors and also banking executives really hoping for those higher interest rates at this point in time. But, you know, to your point, to what extent does that
Are they
start
not profitable enough?
you know,
Have they not been
trading
doing
is starting
well?
to wane.
When Romaine is well rested, he comes out guns blazing.
It's the metaverse.
15,
He really
16,
was
it's
in the
not enough to
metaverse.
make money.
Let me just leave you here with a quick note. Steve Whiting, of course, who we just spoke to on TV, had a really good point. 4 rate hikes by the end of 2023 is in line with historical standards. What is different this time is the market has such a high degree of conviction that in those 4 rate hikes, nothing will go wrong that makes them rethink that. And that is what feels different this time around.
But what's also really tricky is right now you have Americans so upbeat about the prospect of the job market, right? It's such a tight market in terms of the labor situation, but they're not so upbeat about the employment. Joe Weisenthal writing about this this morning in the 5 things to watch, and I think that's very interesting. Usually those 2 things are in tandem. If you're upbeat about the labor market, you're upbeat about the economy. So how do we kind of fix that? How does the Fed make sense of it? I'm just going to put it out there. Metaverse or not.
By the way, Meta Platforms was up 2% today.
See, there you go. All right, we got to run. That does it for our market wrap, our Beyond the Bell, our comprehensive coverage of the financial markets on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again Monday, same time, same place. Tuesday.
All right, we're going to continue our coverage here. The Biden administration is dealing with many concerns, from the Build Back Better agenda to labor shortages to a supply chain crisis. Our very own David Weston, he's standing by right now with a key member of the administration. David?
Thank you so much, Romaine. Yes, we are joined by Wale Adeyemo. He is the Deputy Secretary of the United States Treasury. Mr. Adeyemo, thank you so much for joining us. I'd like to actually go back a day or so to the G20 meetings in Rome, because it was a major accomplishment there. Larry Summers, somebody you know well, said it potentially is the most important international economic agreement of the century, and that is the global minimum tax, something important to you and your boss, Janet Yellen. Explain why that's so important.
Well, David, thank you so much for having me, and it's great to be here with you to talk about what I think is the biggest change to global taxes in over 100 years. The international minimum tax provides us with a change in taxes that means that we're going from a place where there was a race to the bottom to ending that and creating a level playing field for international companies. What this means is that countries around the world have moved to a place where they will have revenues coming in from companies that do business in them, and it'll mean that American companies, instead of looking to go abroad in order to lower their taxation, will be incentivized to stay here and make investments in America. These investments will help improve our economy, and it'll also mean that for a multinational company in America, which today on average pays under 8% in taxes, they will be required to pay a more level tax rate, which will allow small businesses in America to compete better with them going forward, and will improve our economy over the long term.
As you know so well, perhaps better than I, a lot of Republicans had objections to increasing the corporate rate, specifically because it said it would disadvantage U.S. companies versus the rest of the world. As I understand, this global minimum tax could address at least some of that issue, but now you're not increasing the rate. Why is it important that we have a level playing field? And maybe most important, when will we actually see the money?
So it's critical, David, that we have a level playing field, because it means that our companies are able to compete equally with companies around the world. And this is true for especially companies that make things in America, who had for a long time had to compete against companies that were able to invert and move to other jurisdictions in order to lower their tax rates. By reaching this deal, which Secretary Yellen struck with over 130 countries around the world, it means that for a company, they no longer are looking to a country where they can compete based on tax rates, but instead will be looking to countries where they can compete in terms of the strength of their workers, the strength of their infrastructure, the ability to innovate. And our belief is that America will win out when you're competing on those issues rather than on the lower tax rate.
Another major issue, obviously, pending in Washington right now is the Build Back Better proposal. We heard actually from from Senator Manchin just today about that. There are concerns about how we would pay for some of the programs in that. Would the global minimum tax help pay for some of Build Back Better?
David, you're right that the global minimum tax deal that is included in the Build Back Better Act would help pay for the proposals in the Build Back Better Act. And the key thing to remember is that the president made a commitment, and he's kept that commitment, to pay for the Build Back Better Act. So it will not add to our debts or deficits. And he pays by it by increasing taxes on the wealthy and on companies that have done quite well during the pandemic, but keeps his commitment to people making under $400,000 not to increase their taxes. In fact, the families of 35 million families in America will actually see a tax cut. So the Build Back Better Act meets the requirements that Senator Manchin has set out. It actually cuts the deficit. It helps us deal with some of the inflationary pressures that have been caused by the pandemic, and it actually creates jobs as well.
So as I understood Senator Manchin today, he didn't necessarily believe, at least not yet, what you just said. That is, number one, that it would be paid for, and number two, it would address inflation. In fact, he's quite specifically said he cannot vote for something that he thinks is going to really add to what he calls historic inflation. How do you satisfy Senator Manchin in those regards?
Well, David, the president's framework does satisfy Senator Manchin, and I understand that he wants to read the legislation that is written based on that framework. But when you look at the framework, it includes fully paying for the legislation using tax increases on the wealthy and on corporations, including the international minimum tax that is included there. It also includes ways for us to help address some of the pressures that have been built in our economy due to the pandemic. For example, I was in Philadelphia last week and had an opportunity to sit down with parents who are thinking about re-entering the labor force. One of their big concerns was, what do I do with my children in terms of those who are not in school? This plan includes the biggest expansion in education for kids in over 100 years, where kids who are 3 and 4 will have guaranteed universal education. In addition to doing that, it'll create jobs by providing incentives to those people who are making decisions on how they can hire new employees to do things like help us address climate change, and also investing in training for workers in order to make sure that our economy is better positioned to compete in the future.
Mr. Adeyemo, I said that Larry Summers, whom we both know, was very complimentary about the global minimum tax, also has been very complimentary about adding resources to the IRS to make sure people are paying their fair share of taxes. He was less complimentary. He said he just couldn't understand why it didn't go further, the tax proposals, and that is to address things like people who make less than $10 million a year. As he put it, we're not raising the rates at all on people making anything less than $10 million a year. We're not addressing things like carried interest. We're not addressing some of the stepped-up basis. What do you say to that? Because I know that President Biden has made a priority to try to address income and wealth inequality in this country.
So, David, the first thing I would say is that the Build Back Better Act goes a long way towards addressing those issues of inequality by raising taxes on the wealthiest in America. As you know, the president made a number of proposals, and he's made it very clear that the Build Back Better Act represents a compromise that includes a number of the proposals that he's advocated for, but doesn't include some of them. Our goal here is to make sure that we get the Build Back Better Act implemented, because we know that it's going to include transformative changes for our economy that will help us create jobs, and at the same time it's paid for in a way that will mean that over time our debts and deficits will go down.
I mentioned the G20. Let's talk about the COP26 meetings that now have started just today. A lot needs to be done. A lot of people agree on the climate. It's going to cost a lot of money. What will the Build Back Better plan do in stepping us toward that? Because, as I said, it's an enormous amount of money if we're really going to take on climate.
Yeah, David, and I think that addressing climate change is a huge economic issue for us as well. Last year, for example, almost $100 billion was spent dealing with the impacts of climate-related weather effects in this country. The president's making huge investments in climate in order to make sure that we can address the challenge that climate change creates for our economy, but also in order to make sure that we're in a place where we can create jobs based on the transition that we're going to make in our economy. the creation of jobs is really a competitiveness issue for us. By putting these incentives in the Build Back Better Act, it puts us in a position where America can be a leader on these issues in order to make sure that America is the most competitive nation in the future when it comes to addressing the impacts of climate change.
Another item in the news today has to do with cryptocurrency, particularly stablecoin. A report came out of your department, Department of Treasury, along with the Fed and some regulators, saying we'd like Congress to give us power to regulate stablecoins like a bank account. But by the way, we have a plan B. We may declare that it's systemically important and regulate it that way. What exactly do you not have power to do right now that you need power to do?
So, David, what we're attempting to do is provide those in the industry with a regulatory framework in order to make sure that they know where they can innovate going forward. Regulators within the President's Working Group developed this report in order to provide Congress with our recommendations in terms of what we think they need to do to provide us with the regulatory tools to fully address the potential risks. But at the moment, a number of the regulators around the table have various authorities to regulate, including the Financial Stability Oversight Council, which will look closely at these issues. It's critical from our standpoint that Congress acts because it allows us to have a holistic approach to this emerging industry. But if Congress is unable to act quickly, the regulators around the table will take actions to make sure that we can protect financial stability, protect consumers and investors as well.
One last quick question here, if I could. Besides your responsibility for the financial system overall, you also have responsibility for the sanctions system. To what extent does cryptocurrency potentially undermine your ability to enforce current laws on things like sanctions against countries, but also things like money laundering?
We believe that cryptocurrencies have the ability to follow our anti-money laundering standards when implemented properly. Our goal is to make sure that we make clear to the industry and work with them to ensure that exchanges and wallets implement anti-money laundering procedures and know your customers procedures. But as you know, this is a global industry, so we're committed to working closely with our international partners and allies. And when exchanges or mixers don't follow the rules of the road and are used for criminal purposes, to hold them accountable going forward. But our view is that if we work well to provide these exchanges and cryptocurrencies with clear rules of the road, they have the ability to follow them in a way that meets our needs in terms of protecting our national security.
Okay, Mr. Adeyemo, thank you so much for your time today. Really appreciate it. That's U.S. Deputy Secretary of the Treasury, Wally Adeyemo from New York. And this is Bloomberg.
Thank you so much to David Weston. Bloomberg Business Week is brought to you by Witham. More than CPAs, they are trusted advisors offering smart business solutions to help companies innovate, grow, and stay secure in today's complex world. Visit witham.com for more.
All right, we promised you that we were going to bring a bunch of our most read stories. We've covered a couple of them already. Here's another one that is one of our most read on the Bloomberg today. Remember the metaverse? Yes, the catalyst for the company name change at Facebook to Meta. We talked about it a lot last week. Well, it seems like others are embracing the metaverse as well. And Tim, that includes the chip company NVIDIA.
Ian King is U.S. semiconductor and networking reporter at Bloomberg News. He joins us on the phone from San Francisco. Ian, when I think of chips, I think of you, so I'm really glad we have you on the program to talk about this. What is NVIDIA doing specifically that indicates it's also going all in on the metaverse, just like Facebook or Meta Platforms Inc., as it's known now?
Right. I mean, NVIDIA's founder, Jensen Huang, has long been this kind of evangelist for coming technologies. And quite often, you know, he's got way ahead of the curve and really, particularly for a chip industry executive, talked about things which surprised people and then has kind of proven out and provided markets for him or markets for other people. So he's now talking about this metaverse as the next big thing, and therefore we thought it was interesting to try and tell this story about what exactly did NVIDIA mean here.
Well, and so parse it out through, for us, Ian, in terms of how we should read, what NVIDIA's role might be. I mean, it sounds like they're talking their book a little bit, but it also sounds like that they're a believer in the metaverse.
That's right. I mean, at the simplest level, they're talking about this being the 3D internet. 3D data, 3D files compared to 2D, which is basically what we have now with the internet, straight basically a page structure, moving to a 3D visual video structure. massive amounts more data that needs to be manipulated, and that's where NVIDIA's graphics processors, whether it's in your computer or whether it's in a data center, that's where they earn their money. So it makes perfect sense for NVIDIA to view this as a positive development as creating demand for their chips.
I'm still wondering, though, what a 3D internet looks like and how that view of it might be different from NVIDIA's top brass versus what Mark Zuckerberg laid out last week. Because I think a lot of people are still trying to understand what exactly is the metaverse.
Yeah, no, you nailed it. And when I spoke with NVIDIA, I was obviously doing it with a wry smile on my face as well. And I was like, come on, give me examples. The classic example, as it exists, is what NVIDIA is very good at, which is gaming. Basically, people all around the world are plugged into computers, interacting with people that they've never met, never will meet, talking with them, fighting with them in an artificial environment that they all share. That is in itself the metaverse. But obviously, for it to have significance, it has to be bigger than this. So what NVIDIA is saying is like, look, this is just the beginning. Other things, other everyday activities that we now take for granted will move into this format. And they gave a couple of examples. They talk about BMW having a virtual factory. When they want to retool their factory, they do it in virtual before they do it in real so that they can iron out the mistakes or possible problems and get it done cheaper. They talked about, shopping experiences, about design, things like that. But really, no real concrete examples.
It's interesting, too, you talk, Ian, about NVIDIA and its Omniverse software. And I do think a lot about this in terms of what Facebook or Meta now is thinking about the importance of having the platform to build all of this, right? We're all in on maybe an Apple platform or an Android platform. Like, I get it, the power of it. Is NVIDIA right that they could be, the platform that's really key in this new universe?
I think you've highlighted a very important thing here. A few years ago, NVIDIA were talking about this thing called CUDA, and everybody was like, well, why do we care about free software? Why do we care about this? And that became the platform where a lot of AI work got done on, and then AI became part of everyday life, became part of how Siri works, became part of how a lot of things get processed on the internet. So NVIDIA was ahead of that, and they're saying basically the same thing. They're saying, hey, look, here's some kind of middleware that you need. It'll make everything sort of talk to each other, and that'll be how things take off. That's the argument. It's worked for them before, more recently with AI, and that's what they're aiming to do again here.
Okay, so NVIDIA is right now trying to acquire ARM from SoftBank in what would be the largest deal in chip industry history. What would that do for NVIDIA's metaverse aspirations?
Again, if you believe in this expansive vision of the internet, then we're going to need more hardware. We're going to need sensors. We're going to need microphones. We're going to need lots and lots of more peripheral devices. Right now, NVIDIA is in PCs and it's in servers. It's not in all of these peripheral devices, which it believes the world is going to be full of, to make this metaverse a reality, this meshing of the real world with this perfect creation of this online photorealistic world happen. If it gets ARM's technology everywhere, so that's what gives it the play there.
Which is why we talked earlier about, who's going to be the next $1 trillion market cap company. And on that list, Tencent was on it, but NVIDIA was on it in a big way. And just talking about the role of this company going forward and just the move up that we've seen in that share price over the last few years.
650 billion, 645.
Getting there.
Getting there.
Still got to run. Ian King writes something. It's a must read here at Bloomberg, and it should be in your universe as well. Ian King, metaverse or not. He is U.S. semiconductor and networking reporter here at Bloomberg.
Broadcasting live from the Bloomberg Interactive Brokers Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 1061 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
All right, you are listening to Bloomberg Business Week. This is an interview I've been looking forward to for a long time. You and I talked about it. We were interested in the company, and then I did a kind of random call over the summer, and the CEO picked up.
It's the CEO of Aura Health joining us in just a few minutes.
Yeah.
We're going to talk all about the Aura Ring.
Yeah, it's all about wearables, and it's all about getting a good night's sleep and so much more. So we'll get into it in just a moment. First up, though, let's check in once again with Charlie Pellet, how that first day of November, trading day of November.
And it was an update. Records, as a matter of fact, Carol Master, not just a record. We saw the Dow push above 36,000 for the first time before closing at 35,913, up 94 points today, a gain of about 0.3%. To put that in context, we had the S&P up 8 higher by 0.2%. NASDAQ up 97 higher by 0.6. Perhaps the big story today, the big market story, was the surge in the Russell 2000, rallying today by 2.7%. Bottom line here, stocks at another record of solid corporate earnings overshadowed disappointing manufacturing data. After the bell, we heard from Avis Budget. Its shares driving higher right now, up 4.4%. Did report adjusted earnings per share for the third quarter that beat the average analyst estimate. And moments ago, heard from NXP Semiconductors. It's a major chip supplier to the automotive industry. It delivered a bullish revenue forecast for the current period. 10-year yield right now, 1.55%. Well, as for the market backdrop, Hank Smith, Chief Investment Officer at Haverford Trust, he was our guest right here on Bloomberg Business Week.
This continues to be a buy on the dips market as it has been all year. And in fact, since the start of the new bull market, March 24th, 2020, as well, despite the rise in yields with the 10-year Treasury at 1.57%, it is still not competition for the stock market. So we're still in a TINA environment. There is no alternative.
And again, 10-year yield 1.55%. Spot gold up 0.6%, $17.93 the ounce. West Texas Intermediate crude up 0.5%, $83.98 a barrel. Tesla higher for a fourth straight day after recording the biggest monthly gain in almost a year, as amid a lithium supply deal and the kickoff of the COP26 climate summit in Glasgow. And by the way, our coverage will continue. Tesla shares up by 8.5%. Briefly, Coca-Cola acquiring the remaining stake it didn't already own in Body Armor for $5.6 billion in cash. KO, Coca-Cola down 0.4%. And that's a Bloomberg Business Flash.
I appreciate the update. Charlie Pellet there. So they're part of the growing wearables market, one that by one estimate expected to grow by more than 76 or to 76 billion by the end of 2028. More companies, including Meta, we know, looking to move deeper into it. And another is our next guest, the wearable health platform Aura Health, which just launched its third generation Aura Ring. That was last week. So let's get into it, talk about the company and the outlook of the industry. Harpreet Rai is CEO of Aura Health, and he joins us via Zoom in San Francisco. Harpreet, great to have you here. How are you?
I'm great, Carol. Thanks for asking.
I was kidding them. I was teasing before we got going that it really was that random call on a summer night, and I tracked down your number and was like, "Hi, I want to talk about Aura Ring," and there you were. So glad to have you here. Tim and I are both very interested in the company. We have not yet used the product, so we're very familiar with it. We're familiar with the wearables market. Tell us, though, for those who are not familiar with it, what exactly you guys are doing.
Yeah, look, so we make a wearable ring called the Aura Ring. You know, it looks like, a normal ring, and it connects to your phone, and we have, both iOS and Android. And, we give users daily insights about their health, mainly focusing on their sleep, activity, and something we call readiness.
Well, I'm curious about how you get that data and then how you present the data, because if you look at what you can do, daytime heart rate, period prediction, improved temperature sensing, workout heart rate, improved sleep staging, blood oxygen sensing, activity score, sleep score, activity detection, heart rate variability. I mean, the list goes on and on and on. How do you make this into actionable data that improves the life of somebody who's using the product?
Tim, it's a great question, right? It almost seems like it can be data overflow. But we keep it really simple and we personalize it to you. So we have 3 main scores: your activity score, your sleep score, and something called the readiness score. And the readiness score is something that takes an overall look at both your sleep and activity patterns over the last 2 weeks and prior, frankly, a month or so. But then, as you noted, some of these other features, right, like things like if you're getting, ill, we've done some research on that during the pandemic. We will actually have certain alerts that come through the insight messages in our scores every day. So every day, a user actually sees their own data, sees their scores that are personalized to them based on their baseline, and then it gives you a little bit of a tip or an insight. And we really feel like that helps contextualize the data, and we're now starting to offer a lot more content. So you actually get proof. So we try to simplify all that data down and giving people a little bit of nuggets every day, which we call our insight engine.
So Harpreet, talk to us about some of the suggestions you give to people, because I'm always curious about the impact. I love wearables, but it is a lot of information. Tell me, though, how it can improve us, especially when it comes to something like sleep, which I have to tell you, whenever I go into a doctor with a problem, they're like, so how are you sleeping? Because your body can't heal unless you're sleeping well. It really is. I think you've described it as kind of the magic pill, and it seems so easy, but it's not always that way.
Yeah. Look, I think all of us, unfortunately, know what a poor night of sleep feels like, right? Like we're more stressed, we're more irritable, right? We're grouchy, we're not as sharp as we want to be.
That's why Tim and I are both very cranky today, because we did not sleep well, and we both hit our snooze buttons a million times this morning.
It's okay. It's rainy here in San Francisco, so I'm sure a lot of people did that today too. But no, look, I think unfortunately, as you mentioned, that the actual impact to sleep and your health, right, is becoming more and more prevalent in the news, as it should be. Lack of sleep has actually been linked to early onset of Alzheimer's, to unfortunately higher incident rate of cancers, and even things as more simple as like even just your memory recall and what you can remember that day. So I think sleep does have a huge impact on your health. But what we find is by giving users this information every day, right, they're able to see if something's changing and something's off. And then they sort of ask themselves, what did I do yesterday? And so you may actually see that your resting heart rate, on a certain night is actually higher than normal, right? And we'll give you a little message. Hey, it looks like your heart rate was high, higher than normal. What is that? Maybe because you ate too late, or maybe you were stressed, or were you up late working? And so we actually try to give these messages to contextualize the data that allow users to ask themselves, hey, what did I do? And frankly, I think the analogy I like to use is, it's sort of like the car. Right. So cars nowadays have all types of sensors. Right. And you may have tire pressure running low in one tire. Now, we're not, the car doesn't say, hey, your tire's flat. Right. It doesn't say why that happened. Is it because you ran over a nail, or, you parked it outside uphill on a cold day? So your front tires. So I think it's like that same analogy that if you look at that data, what's that saying? Peter Drucker, what gets measured gets mastered.
Right. And you got to.
So when you start to see this data all the time, you can start to see if something's off. And I think it's that check engine light or that check tire light.
Check engine light. Don't ignore it. Hang on, Harpreet. We got to just do a little bit of news, but we'll come back with the CEO of Oral Health in just a moment. Right now, though, it's off to Denise Pellegrini in our 1130 newsroom. Hey, Denise.
Hey, well, one of the things we're tracking is Joe Manchin, because he says, quote, it's time to stop playing games and pass the infrastructure package. Here's how he put it.
For the sake of the country, I urge the House to vote and pass the bipartisan infrastructure bill. Holding this bill hostage is not going to work in getting my support for reconciliation bill.
And the West Virginia senator commenting to reporters this afternoon. Supreme Court justices today heard 2 challenges to that new Texas law that bans most abortions in the state. Mark Herron is senior counsel at the Center for Reproductive Rights. He argued on behalf of Texas abortion providers, and he says he is hopeful the court will find the law unconstitutional.
You heard today the state of Texas admit that if Texas can do this with the right to abortion, then with Brown versus the Board of Education, a state could have gotten around the Supreme Court's decision in Brown by allowing anyone to sue for $10,000 or more someone who is integrating a school, and that the federal courts would have been completely powerless to do anything about that.
And that was Mark Herron, senior counsel at the Center for Reproductive Rights, and Justices Brett Kavanaugh and Amy Coney Barrett among those indicating the new Texas law may be taking the issue too far. And he wasn't chosen to be Jeopardy host, right? But the NFL's Aaron Rodgers has a new thing going on. He's going to get part of his salary in Bitcoin and give away $1 million of the cryptocurrency to fans. Now, this is all part of Aaron Rodgers' promotion with the Square-backed mobile payments service Cash App. Global News 24 hours a day, on air and on Bloomberg Quick Take. I'm Denise Pellegrini.
Thank you so much, Denise Pellegrini. Wasn't it Aaron Rodgers who had a great meme floating around? Was it last week? Wasn't it, you guys, wasn't he tackled or something and he was on the floor and his on the ground and his face
This is Ari, is that right?
Right? No. There was a meme where he actually like fell on the ground and his face was like traumatized and everybody was like, this is the look when your girlfriend picks up your BlackBerry or something. It's a fun one. All right, moving right along. All right, guys, thanks for the support. Dow Jones Wall Street Journal out with a story by Rolf Winkler. And says, beginning next year, iPhone users who are in a car accident could have their phone dial 911 automatically.
Yeah, Winkler reports that Apple plans to roll out a product feature called crash detection for iPhones and Apple Watches. This is according to documents reviewed by the Wall Street Journal and people who are familiar with the feature.
Yeah, it's interesting. It's basically Apple wants iPhones to detect car crashes. Auto dial 911. Crash detection uses data from sensors built into Apple devices, including the accelerometer, to detect car accidents as they occur, for instance, by measuring a sudden spike in gravity or G-forces on impact.
It's interesting to see Apple increasingly move into emergency services and having those products and products that you buy from Apple be used for those. It makes them even more indispensable, though I don't think many people who own iPhones would really leave them at home when they're going anywhere, right?
Right.
But remember Mark Gurman here at Bloomberg, our colleague, reported just a few months ago that Apple was considering adding technology that would allow people to make emergency calls using satellites. So allowing them to call 911 and emergency services with satellite phone technology.
That's pretty interesting. But think about it. If you're in a car accident, you could basically, if your phone is fine and working, be like, hey, Siri, call 911. Or, I mean, there are a lot of cars that have safety features in the system that have the same thing, that for service you pay, right? And they automatically, you can call police or medics and so on and so forth.
Google, we should note, had a feature in its smartphone, in its Pixel smartphone in 2019. That's when it added it. Winkler writes that Apple is not the first company to roll out crash detection.
And I think about GM's OnStar, right?
Yeah.
That has automatic crash response since 1996. So not a new thing, but it's Apple making its moves, potentially.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
From Bloomberg World Headquarters, I'm Charlie Pellet. We're keeping an eye on Clorox shares after hours. The maker of cleaning products reported better than expected sales, backing up its CEO's bet that higher demand for cleaning products will outlast the pandemic. Clorox shares right now up by 5.3%. Avis Budget shares higher by about 4%. It reported adjusted earnings per share for the third quarter that did beat the average analyst estimate. An update on Wall Street, in fact, records today for the Dow, the S&P, and NASDAQ. The Dow crossed 60,000 for the first time. The outperformer, though, the Russell 2000, surging 2.65%. To put that in context, the S&P was up 0.2%, the Dow up 0.3%, NASDAQ up 0.6%. Stocks climbed to records as solid corporate earnings overshadowed disappointing manufacturing data. The S&P up 8, the Dow up 94, NASDAQ up 97. 10-year yield 1.55%. Spot gold up 0.5%, $17.92 the ounce. West Texas Intermediate crude up 0.5%, $83.95 a barrel. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You're listening to Bloomberg Business Week. Carol Massar along with Tim Stanovic.
Well, let's get back to our guest, Harpreet Rai, the Chief Executive Officer at Aura Health. They're the makers of the Aura Ring. He joins us once again remote on Zoom. Harpreet, the first thing that I notice about the Aura Ring that's different than other wearable devices is that it's on the finger rather than being on the wrist like the Apple Watch or the Whoop or previous examples of technology like Jawbone or a Fitbit, for example. Why the finger?
Yeah, no, look, Tim, it's a great question. I think from an accuracy point of view and convenience, it just ends up being sort of the sweet spot of wearables. So, every hospital you walk into actually takes your heart rate on the finger and your SpO2 as well. And actually, most diabetics, right, measure their glucose by taking a finger prick, right? And it turns out that the pulse on your finger, the pulse signal, is about 100 times stronger than the wrist, where your typical wristwatch sits. So we use that phenomenon that other devices have used in the past, and actually made a wearable from that. And I think what we found is that it's just much more accurate for a lot of these health features, including sleep, things like heart rate variability, which is a sign of stress, or even things like illness and even period prediction and some of the women's health features that we've been developing.
And one thing I'm curious, and I'm thinking of people, Harpreet, who are listening and saying, okay, lots of information, you can give me a heads up. Do you have any anecdote stories about the impact that this device has had on people's lives? Totally. I think, frankly, we've heard everything from people finding out they have a serious medical condition by realizing they have abnormal sleep patterns or that their heart rate was really high compared to others that they knew, to people just realizing like, hey, I started to realize the days that I actually have a glass or two of wine, with dinner, that it actually, ends up reducing my sleep score the next day, and I sort of feel way worse. And I think, we found people just adjusting their daily habits to finding out about things that may be affecting their health that are much more seriously. And frankly, I think it's those stories that we hear from our users that really keep us and our team going. Hey, hang on one second. I just want to mention a headline crossing the Bloomberg. Rivian Automotive, we mentioned earlier, targeting an IPO valuation just above $60 billion, that initially coming from Dow Jones. Well, it just crossed that they plan to sell 135 million shares at $57 to $62 each in that IPO. So again, we continue to see the EV space really off and running. Hey, Harpreet, while we're talking about IPOs, what's the end game for you guys? Because Tim and I were talking to you before we got started. We thought, man, this could be a great add-on for a lot of well-known companies that are out there that are pursuing wearables, are already in the space. Could be an Apple, could be a Facebook. Like, you could kind of go a lot of different places. Amazon. Thank you, Tim. What's the plan for you guys?
Yeah, no, look, I think it's a great question. I think from our perspective, we'll do whatever, really allows for the best risk return for our shareholders. And also, frankly, what allows us that we think to keep executing on our mission, right? And really to bring the world, health as a daily practice. And so, whether that means an IPO or, whether that means an acquisition, I think, we're not focused on that. We're just focused on really making the best possible products and solutions for our customers.
Hey, one thing that I'm wondering about is hardware versus services revenue. If we think about Apple, for example, and the way that it's increasingly moving into services, the Aura Ring, how much is it, first of all, the third generation?
Yeah, it's $299 to $399, and we do have a membership model.
Yeah.
So yeah.
So what
it is
portion
actually
of
$599 a month is after a 6-month free trial that we give you to the software.
So how do you make the software part of it? How do you make that a must buy for people who have it? Like, can they get the Aura Ring and use it without having the software?
Yeah, so we, I think the best way to do it is give people the full experience, right? I think that's something we, probably learned from Spotify out there, right? As just your listeners, right? Their free trial was really the free experience, right? And then over time it sort of degraded and they started to put more ad load on it and things like that, right? And limiting the functionality. And so I think, from our perspective is, when you buy an Aura Ring, it comes with 6 months, right, of our, membership services, right? Which is all the data, all the insights, all the content, all the features. And, after 6 months, if you choose not to continue to pay, we just leave our members with just the 3 basic scores, which is your sleep score, your activity score, and your readiness score. So you no longer get the personalized insights every day, that are generated, and nor access to some of the content or even the deeper features and data. And frankly, I think as you're seeing, right, these wearables have changed, right? When Fitbit came out in the beginning, it was really just a step tracker. Right now, these wearables, including Aura, right, are a sleep lab on your finger, right, an illness monitoring system on your finger, and
Right.
and I think the capability that's needed to do that, you have to invest a lot more as a company, and so I think our membership, revenue does allow us to invest more rapidly in developing those features that we think are best in class, and we hope to do that because that's what our consumers and future members want.
What can you tell us about metrics? We're Bloomberg. We're a little nerdy about when it comes to some of the business metrics on a company. So how many rings have you sold? What kind of growth are you seeing top line? And I'm curious about membership growth too.
Totally. Well, we just announced our new Gen 3 just last week. So not a lot of membership growth yet that we can say because it's so new. But no, we've said we've sold over 500,000 rings now. We've been doubling revenue every year since we started, including this year. So I think, luckily things are on good trajectory. The team's now nearly, over 350 people. So I think, by any means you look at, we've been growing pretty darn fast. And so, I think again, like you're going to see more of these companies come public and, or get acquired because we're seeing so much investment by everyone, as you mentioned, Facebook or Meta, I should say, even getting into the space.
Anybody knocking on the
Amazon,
door?
right?
Anybody knocking on the door?
I think they all have their, they're all keeping their eyes open and ears to the ground. And so I think there's no shortage of opportunity in this space. And I think the big tech companies, see that as well.
He's not going to tell us.
He's not.
Okay. But, is there other devices that will come on the market? Do you expand the brand somehow?
I think, look, we're focused on that ring form factor. With the accuracy that we have, we've shown that, we're most accurate wearable out there on things like sleep and sleep staging. And even now with illness, we have 3 studies that, showed our ability, during the pandemic to see if people are getting sick before they feel symptoms. And, the rings went, into the NBA bubble and WNBA bubbles. And I think the reason that they chose our device over other devices, right, is because of our accuracy. And so I think, you're going to see more and more features coming out that show that the advantage of the form factor, and hence we'll stick to the ring.
We still have a million more questions, so you're going to have to come back because I'm also curious about healthcare companies and really leaning into that area as well. So come back and give us an update very, very soon. Harpreet Rai, his Chief Executive Officer at Aura Health, joining us via Zoom from San Francisco.
Joe Matthew, what do you have coming up on Sound On?
Wow, well, I'll tell you what, we're going to pick up where we left off last week. Joe Manchin shows up right when they thought they had a plan to pass reconciliation and infrastructure. We'll talk more about what he said and what impact it might have.
I know, he's like, let's get something done. And we're like, well wait a minute, Mr. Manchin.
Who has the power to do that?
Exactly. Joe Matthew, host of Sound On, coming your way right here on Bloomberg Radio. For Tim Stanovic, I'm Carol Masser and the whole Bloomberg Business Week team. Have a great and safe evening. This is Bloomberg.